Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Lisa Rowan, consumer finance reporter with Forbes Advisor, a trusted destination for unbiased personal finance advice, news, and reviews to discuss how the pandemic shattered the emergency savings rule of thumb. Lisa, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
How did Americans fare with their savings during the pandemic? How much of emergency savings was actually depleted?
The pandemic really showed how unprepared so many people were to handle a large-scale emergency with their finances. We found that 30% of people who had emergency savings used every penny of it during the pandemic. And even if you look a little more broadly, people who used about 70% of the people who dipped into their savings at all used at least half of their emergency funds. So even the people who were the most prepared for this, really they're building back from scratch or from really depleting those funds as we start to work our way out of the pandemic.
Was the amount of savings consistent among income groups?
It was to an extent. So when you look at the number of months of expenses people had in their emergency funds, you had two main groups, 1 to 3 months of expenses and 3 to 6 months of expenses. And that was pretty even when you look at it across the income groups. You see a little bit of variation when you look at the lowest earners and the highest earners per household. The lowest earners in our survey were those with household incomes under $40,000 a year. And that was, they were a little bit more likely to have less than a month saved for an emergency. When you look at the opposite end of the spectrum, the highest income group that we looked at was people with above $80,000 a year per household, and they were more likely to have 6 months, 8 months, a year or more of savings. But it wasn't like we saw a huge swing in terms of income. For the most part, it was in that 1 to 6 month range. And that really shows us that people are prepared for a small emergency, but they're not really able to plan ahead for a long-term job loss or a health condition that could take them out of the workforce for a long time.
Is there a silver lining to all this? Do you think Americans will place more importance on savings?
I hope so. And we found in our survey that about 50% of the people that we asked say that if they weren't saving for emergencies before, they're going to start saving now. So I think the pandemic has really put front and center for a lot of people that they need to be prepared for a financial emergency because there may not be someone else out there to help them, whether it's the government, you don't know what kind of supplemental benefits will be available, or even just if you used to lean on friends and family, the pandemic taught us that they may not be in a better financial situation than we are during a wide-scale emergency. So you can't necessarily lean on those sources that you might have turned to before.
With pandemic aid coming to an end soon, do you think the process of rebuilding emergency funds will be a challenge?
This is going to be a tough one for a lot of people. If you're thinking about people who have been getting, supplemental unemployment insurance through federal programs, that's coming to an end in a lot of states. And a lot of people aren't back at work yet, either because they haven't found the right fit for them or because, they still have health concerns going forward. So I think for a lot of people, especially those building up their finances from scratch after a really hard pandemic, it's going to take them a very long time to get their finances back on track. And, when you're starting with nothing in a lot of cases, it can make it harder to rebuild from where you left off.
What are some tips to overcome the barriers to building emergency savings? What does the new emergency fund look like?
I say take all of the months of what you're supposed to have and throw them out the window. This is a little bit different if you're someone who has some savings already and you're working with what you already have. You should still have a goal in mind in terms of a cushion that you would like. But if you're starting from ground zero, you need to be thinking about building a savings habit rather than focusing on a particular amount. If you focus on a habit, even if it's $5 a week, $10 a week, thinking of that daily, weekly, monthly habit and building that, it's going to make it easier for you to increase your savings as your finances improve.
All right, Lisa, I appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.